Tax season is right around the corner, and if you're a Canadian taxpayer, you need to know about some important updates that could impact your 2024 tax return. From new tax brackets and RSP contribution limits to changes in capital gains and automobile deductions, there's a lot to cover. So let's break it all down and help you prepare to maximize your tax savings. First, let's talk about federal tax rates. The income tax brackets have been adjusted using a 4.7% indexation factor to account for inflation. If you're filing your 2024 T1 return, you'll want to make sure you use the new brackets when calculating how much tax you owe. Remember, Canada's tax system is progressive, meaning your income is taxed in tiers. For example, if you earned $115,000 in 2024, part of your income is taxed at 15%, then 20.5%, and finally 26% on the remaining amount over $111,734. This results in a total federal tax of $20,682. Next up, we have changes to the capital gains deduction. Originally scheduled to take effect on June 25th, 2024, the changes are postponed to January 1st, 2026. If you plan to sell shares of a small business corporation or qualified farm or fishing property in 2026, pay attention. As of January 1st, 2026, the lifetime capital gains exemption will increase to $1,250,000, up from $1,016,836. This is a significant increase and means you can shield more of your gains from taxation. Make sure you report your capital gains correctly and claim the right deductions. This could save you thousands. Let's talk about automobile deductions. If you use a vehicle for business purposes, as an employer or a business owner, you can deduct certain expenses, but there are limits. Let's take a look at the chart showing what deductions are available to you. For 2024, the capital cost ceiling for regular passenger vehicles is $38,000, while for zero-emission vehicles, it's $61,000. As you can see, the government has created a significant incentive for purchasing electric vehicles. If you lease a car, the maximum monthly lease deduction is $1,050 in 2024. Additionally, the tax-free per kilometer allowance for employment or business-related driving has increased in 2024 from 68 cents to 70 cents for the first 5,000 kilometers and from 62 cents to 64 cents over 5,000 kilometers. Also, if you're an employee claiming vehicle expenses, remember you must have your employer sign Form T-2200 before claiming these expenses on your personal tax return. Next, let's discuss the Basic Personal Amount, or BPA. This is a tax credit all Canadians can claim to reduce taxes payable. For 2024, the maximum BPA is $15,705, but high-income earners will only receive the base amount of $14,156. This ensures middle-income taxpayers get more relief. This amount also reduces the federal taxes you owe, so be sure to check where you fall on the scale. Now, let's talk about Canada Pension Plan CPP contributions. Both employees and employers pay into CPP, and the rates have increased. For 2024, the maximum pensionable earnings are $68,500, meaning that you will not be paying CPP past your income of $68,500. The maximum basic exemption is $3,500, meaning you will not pay into CPP if you earn $3,500 or less of income. Plus, it's important to note that if you're self-employed, you'll be paying both the employee and employer portions of CPP, totaling 9.9%. Additionally, the CPP enhancement was established in 2019 and was designed to increase the amount of money that retirees receive. The enhancement has created a second earnings ceiling called the Year's Additional Maximum Pensionable Earnings, or YAMPE for short. The YAMPE for 2024 is $73,200. How it works is that employees and employers contribute an additional 4% on earnings between the year's maximum pensionable earnings and the YAMPE, and those that are self-employed contribute an additional 8%. Here's an example calculation. Self-employed income, $75,000. Base premium, 9.9%, which comes to $6,435. CPP enhancement, 2%, or $1,300. CPP enhancement, 8%, or $376. The total CPP premiums equal $8,111. If you're saving for retirement, there are new RRSP and TFSA limits to be aware of. For 2024, the maximum RRSP contribution limit is $31,560, and for TFSAs, the annual limit is $7,000, with unused contribution room carried forward. Be aware that RRSP contributions are tax deductible, while TFSA contributions are not. Another change made during Canada's 2024 budget proposal was to the capital gains inclusion rate. Originally scheduled to take effect on June 25, 2024, the changes are postponed to January 1, 2026. The capital gains inclusion rate determines the percentage of realized capital gain that must be included in your taxable income for a given year. For over 20 years, this rate was 50%. However, for any capital gain realized on or after January 1, 2026, the capital gains inclusion rate has increased to 2/3, 67%. This means more of your capital gains will be taxed, so strategic tax planning is more important than ever. Next is the updates to the employee stock option deduction. Originally scheduled to take effect on June 25, 2024, the changes are also postponed to January 1, 2026. The tax deduction is 1/3 instead of 1/2 for options exercised after January 1, 2026. How it works is that the stock option benefit is priced at the fair market value of the stock on the date of exercise or purchase, in excess of the purchase price. For example, let's say Shreya has the option to purchase 1,000 shares of stock in their company at $1 per share. When Shreya purchases the stock, it's trading at $10 per share. This would mean Shreya has a benefit of $9,000. The deduction before January 1, 2026 is 50%, or $4,500. The deduction after December 31, 2025 is 33.33%, or $3,000. Lastly, the government has made several changes to the T1 forms for the 2024 tax year. Some notable changes are to Form T2200, which are work from home expenses, as well as changes to short-term rental expenses. You can find all of the necessary forms by visiting the Canada Revenue Agency website or Googling CRA T1 tax package. That's a wrap on 2024 tax changes. I know it's a lot of information, but staying on top of these updates can save you money and help you file accurately. If you have any questions or need professional tax advice, reach out to our team. We'd love to help.